Hey everyone, welcome back to Market Meridian. If you're new here, my name is Eric, and every month, I break down the institutional research, market trends, and actionable stock watch lists to help you navigate the US markets with clarity, not hype. Today, we're diving deep into April 2026 must-buy and must-sell stock list, straight from the latest institutional research and market data. We'll cover the core themes driving this month's moves, the high-growth stocks to target, the high-risk names to avoid, and the critical market background you need to understand to make smart decisions. Before we start, a quick disclaimer: this video is for educational and informational purposes only, and does not constitute investment advice. All investments carry risk, and you should always do your own due diligence before making any investment decisions. Let's jump right in first. Let's set the stage. To understand this month's buy and sell list, you have to understand the four core market drivers that are shaping every trade in April 2026. First, Fed rate cut expectations. The market is now pricing in a first rate cut in June 2026, which is a massive tailwind for both growth stocks, like tech and AI, and financial and value stocks, which benefit from lower interest rates. Second, the AI supercycle continues. The AI boom isn't slowing down. Demand for compute power, data storage, and cybersecurity is at an all-time high, and this is the core market theme for 2026, full stop. Third, seasonality. Historically, April is a strong month for US equities, but we have to be cautious. The second half of Q2 could bring increased volatility, as we head into the summer months and earnings season. Fourth, key risks. We can't ignore the headwinds, ongoing geopolitical tensions, sticky inflation that could delay rate cuts, and the risk of corporate earnings missing expectations as we move through the year. This backdrop is why our buy list is focused on high-growth AI plays, defensive value stocks, and economic recovery beneficiaries, while our sell list targets names that are exposed to high interest rates, overvaluation, and weakening demand. Let's start with the good stuff, the stocks that institutions are bullish on, with strong fundamentals, high growth, and attractive valuations for April. I've broken this into four core categories, so you can align these picks with your own investment strategy. First up, tech AI, the core market theme. AI is the undisputed leader of this market, and these three stocks are the best place to capture this growth, even after the recent run-up. First, Microsoft, ticker Microsoft. Microsoft is the undisputed AI leader, and it's not even close. The company's Copilot AI tool is seeing explosive commercial adoption, with enterprise customers signing massive multi-year contracts. After a recent pullback, the stock's valuation is now much more attractive, making it a perfect buy for April. Microsoft has everything you want in a tech stock: a dominant market position, recurring revenue streams, a balance sheet loaded with cash, and exposure to every corner of the AI ecosystem, from cloud infrastructure to consumer software. This is a core holding for any long-term portfolio, and April is a great entry point. Second, Applied Materials, ticker Applied Materials. If AI is the engine, semiconductor equipment is the fuel. Applied Materials is the global leader in semiconductor manufacturing equipment, and every AI chip that's made requires AMAT's tools. As AI giants like NVIDIA, TSMC, and Intel ramp up their chip production to meet demand, AMAT's order book is completely full. This is a pure play on the AI compute boom, and it's a stock that benefits from the entire semiconductor supply chain. With strong earnings, consistent growth, and a reasonable valuation, Applied Materials is a must-buy for anyone betting on the AI supercycle. Third, Palo Alto Networks, ticker PANW. As AI adoption explodes, so does cyber risk. Palo Alto Networks is the global leader in cybersecurity, with a best-in-class platform that protects enterprises from AI-powered cyber attacks, data breaches, and ransomware. The stock has pulled back nearly 30% from its recent highs, creating a fantastic buying opportunity. Cybersecurity is a non-negotiable expense for every business, and PANW's platform strategy gives it recurring, high-margin revenue that's resilient to economic downturns. This is a defensive growth stock that's perfect for April's uncertain market. Next category. Financial value, defense plus rate cut beneficiaries. With rate cuts on the horizon, financial and value stocks are primed for a strong run in April. These are defensive, high-quality names with low valuations and strong cash flow. First, Citigroup, ticker C. Citigroup is a leading global investment bank, and it's one of the most undervalued major banks on the market. The company has cleaned up its balance sheet, improved its asset quality, and is perfectly positioned to benefit from the Fed's upcoming rate cuts. Lower interest rates will boost Citi's net interest income, reduce loan loss provisions, and drive investment banking activity as M&A and IPO markets heat up. With a low P/E ratio and a strong dividend, C is a classic value play that's ready to rally in April. Second, Fiserv, ticker FISV. Fiserv is a fintech leader that provides payment processing and core banking systems to thousands of financial institutions around the world. This is a must-have service for banks, which means Fiserv has recurring, recession-resistant revenue. The stock trades at a low P/E ratio, offers a high dividend yield, and is a direct beneficiary of the ongoing shift to digital payments. With rate cuts on the way, financial stocks like FISV will see multiple expansion, making it a great buy for April. Third category, industrial cyclical economic recovery plays. As the U.S. economy continues to recover, industrial and cyclical stocks are starting to move. These two names are leaders in their sectors with strong long-term growth drivers. First, Johnson Controls, ticker JCI. Johnson Controls is the global leader in building automation and HVAC systems. The company is perfectly positioned to benefit from two massive secular trends, the rise of smart buildings and the global push for carbon neutrality. As businesses and governments invest in energy-efficient building technology, JCI's products are in high demand. The stock has strong earnings, a global footprint, and exposure to the ongoing economic recovery, making it a great industrial play for April. Second, Valero Energy, ticker VLO. Valero is the largest independent refiner in the United States, and it's a leader in the energy sector. Refiners benefit from stable energy demand, and Valero has a strong balance sheet, high profit margins, and a generous dividend. With energy prices remaining supported, Valero is a defensive energy play that offers consistent cash flow and high shareholder returns. It's a great stock for investors looking for exposure to energy without the volatility of upstream oil and gas producers. Fourth category, healthcare consumer staples, defensive holdings. For investors looking to add defense to their portfolio, these two stocks are perfect for April. They're resilient to market volatility, with strong cash flow and stable demand. First, Gilead Sciences, ticker GILD. Gilead Sciences is a biotech giant with a deep pipeline of drugs for HIV, liver disease, and oncology. The company has a strong portfolio of approved drugs, consistent revenue growth, and a reasonable valuation. Gilead's pipeline is full of potential blockbusters, and the company is a leader in the fight against infectious diseases. With a low P/E ratio and a strong dividend, GILD is a defensive healthcare stock that's perfect for any portfolio. Second, Costco, ticker COST. Costco is the king of retail, with a membership-based business model that generates consistent, recurring cash flow, no matter the economic environment. The company's loyal customer base, low-cost structure, and high-quality products make it one of the most resilient retailers in the world. Costco is a classic defensive stock that outperforms in both bull and bear markets. With strong same-store sales growth, expanding margins, and a loyal membership base, COST is a must-buy for any investor looking for stability in April. Now, let's talk about the stocks you need to avoid or sell in April. These are high-risk names with weak fundamentals, overvalued prices, or exposure to major headwinds that will weigh on their performance this month. First category, real estate construction, interest rate headwinds. First, Lennar, ticker LEN. Lennar is one of the largest homebuilders in the United States, and it's facing massive headwinds in 2026. Mortgage rates remain elevated, housing demand is sliding, and rising construction costs are squeezing profit margins. Even with rate cuts on the horizon, the housing market is still in a slowdown, and homebuilder stocks will continue to underperform. If you hold LEN, April is a great time to exit or reduce your position. Second category, tech high valuation, pullback pressure. First, Fair Isaac, ticker FICO. Fair Isaac is the company behind the FICO credit score, a household name in consumer finance. But the stock is massively overvalued, with a sky-high P/E ratio and slowing growth. The company's core business is mature, and there's limited room for future growth. With the stock trading at a huge premium to the market, it's at severe risk of a major pullback in April. This is a stock to avoid at all costs. Third category, consumer media, weak recovery. First, Disney, ticker DIS. Disney is an iconic brand, but the company is facing major headwinds in 2026. Its streaming business is still losing money, theme park growth is topping out, and the company's linear TV business is in secular decline. Disney's earnings are under pressure, and the stock has been in a downtrend for months. With no clear path to sustainable growth in streaming, DIS is a high-risk stock to avoid in April. Second, Mondelez International, ticker MDLZ. Mondelez is a global snack giant, with brands like Oreo, Cadbury, and Nabisco. But the company is facing major headwinds. Persistent inflation is raising input costs, squeezing profit margins, and consumers are cutting back on discretionary snack spending. MDLZ's growth is slowing, and the stock is facing pressure from weak consumer demand. This is a consumer stock to avoid in April, as inflation continues to weigh on margins. Fourth category, industrial and materials, weak demand. First, Otis Worldwide, ticker Otis. Otis is the world's largest elevator manufacturer, and it's heavily exposed to the global real estate market. With new construction activity slowing around the world, especially in commercial real estate, Otis is facing weak demand for new elevators. The stock is tied to the struggling real estate sector, and it will continue to underperform as new construction remains depressed. This is a stock to sell or avoid in April. Second, PPG Industries, ticker PPG. PPG is a global leader in paint and coatings, used in everything from cars to buildings. But the company is facing weak demand from the manufacturing sector, as industrial activity slows, and rising raw material costs are squeezing margins. With manufacturing demand remaining soft, PPG's earnings will continue to be under pressure. This is an industrial stock to avoid in April. So, what does this mean for your portfolio? Here's my actionable strategy for April 2026. First, overweight tech AI. Allocate 30 to 40% of your growth portfolio to AI leaders like MSFT, AMAT, and PANW, to capture the ongoing AI supercycle. Second, add defensive value. Put 20 to 25% of your portfolio in financial, healthcare, and consumer staple stocks like FISV, Guild, and Cost, to hedge against market volatility. Third, avoid high-risk sectors, stay away from homebuilders, overvalued tech, and industrial stocks exposed to weak demand, like LEN, FICO, DIS, and Otis. Fourth, watch the Fed. Keep a close eye on inflation data and Fed commentary, as any delay to rate cuts could trigger a market pullback. Remember, this is a watch list, not a recommendation to buy or sell. Always do your own research, align your investments with your risk tolerance, and never invest money you can't afford to lose. That's it for our April 2026 US stock buy, sell watch list. I hope this breakdown helps you navigate the markets this month with confidence. If you found this video helpful, please hit the like button, subscribe to the channel, and turn on notifications so you don't miss our next market update. Let me know in the comments, what stocks are you buying or selling in April? I read every comment. Thank you for watching, and I'll see you in the next video.